Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because schools aren't. So let's get started. So are you confused about the stock market or a beginner in the stock market? Well, in this video, we're going over how the stock market works. AKA stock market for dummies. Not that I'm calling you a dummy. I'm keeping it simple for you guys. I'm keeping it the KISS strategy. Keep it simple, stupid. So let's start it off with a boring definition, just like every other high school class, but with stocks. If you own stock, it is a partial ownership of a business. So simply put it, if the business does good, so do you. Now, there are usually millions and millions of shares of a company, so in most situations we'll probably not have much power in that company. Unless you're Superman or Warren Buffett, which is essentially Superman of investing, we're not going to have much voting rights or ownership of that company. However, not many people care about the ownership. They care about making money. So there are a couple different ways of making money in the stock market. The first way that you can make money in the stock market, guys, is through capital gains. If the stock goes up, you make money. A quick example, let's say you have stock and it was $40. You bought it at $40 and it went up to $50. You made $10 per share. So if you had 10 shares times the $10, you made $100. The second way of making money in the stock market is through dividends. Now, when you own a stock, some companies pay a dividend, which means the money that they make in, profits, since you're a stockholder, they give you part of those profits. So another quick example, going back to those 10 shares that we had worth $40 before, you might get a 2% dividend on that. So you'll get $8. Now, don't let dividends fool you guys. Yeah, $8 isn't anything essentially, but what happens if you own 100 shares? That would be $80. If you own 1,000 shares, that's $8,000. So do not disregard dividends just yet. So if you guys are visual learners like I am, that probably didn't mean a damn thing to you, so let me show you what I'm talking about. Boom, I'm using Yahoo Finance. I love Yahoo Finance because it's super simple. First, I'm going to start off with Apple because they are the largest company in the world and every single person and their dog knows them. Simple. So you could see that they closed. Today is September 9th. If you want to, October 9th. Oh my God, October 9th, if it matters to you guys. But Apple closed at $155.84. You can see the chart over there. I have it set to 1 year. So obviously, you can see they are up from a year ago. So far, they are up 34%. So not too bad at all. And if you look a little bit further down, you could see some fancy numbers. But for that second column, it says market cap, beta. Don't worry about that right now. Keeping it simple for you guys. But look to the dividend toward the bottom there. Apple pays a dividend. So if the stock goes up, if it goes down, doesn't matter, you get paid. So that says $2.52 per share. So if you paid $155 and change for one share, you're going to get $2.52 for that year, which is around 1.6%. Moving on to another example that you guys know, Nike. They closed at around $51, and you could see if they're up and down. So depending on the company, could do good, could do bad. But for the long term, we're going to talk a bit about that later. They should be fine, I guess. We'll see what happens. But you could see that a little bit further down, again, toward the dividend, they pay some too. A little bit less than Apple, 1.4%, but they'll give you 72 cents per share. Now you could see each stock or each company is a different price. Some might be less, like we just saw with Nike around 50 bucks, and with this big boy, boom, Amazon, $990 a share. So again, you could see their year, they are up. Sorry, back at Nike, they were down around 0.5%. But with Amazon, they are up almost, or a little greater than 17%. And they do not have a dividend. You could see toward the bottom. And I'll give you guys one more example just because I'm a visual learner and I think most people are. That's why I like to give examples to show you guys. This one is with Tesla. That is that electric car company. By the way, I'm not suggesting to buy any of these companies. These are examples. Do your own research. We're going to get into that in a second. But they are at $342.94 a share. You could see their year. They are up, doing very well actually. They do not have a dividend. And they returned almost 70%. Now what if you don't know which stock to choose, guys? Of course, the ones that we just looked at, Nike, they lost a little money, versus Tesla, they're coming close to doubling their money. That's quite the difference. So an option, instead of buying one company, one stock, and only one business, why don't you buy them all? Now there are things called mutual funds. They have a bunch of different companies like we looked at, all in one package. Or another thing besides mutual funds, which is just a group of companies, an index fund is all of them. So one huge index is the Dow Jones Industrial Average. That is 30 of the largest companies in America. Another one is the S&P 500. You guessed it, 500 of the largest companies. So you can see here, there are ups and downs throughout its history. This is the index, the S&P 500, 500 of the largest companies. They have returned around 70%. So if you stick it out for the long term, guys, remember long term, it is actually safe. Now I want to use the idea of the word safe loosely, but think of 500 companies that we all know, including the ones that we looked at. Now, over the long term, yeah, some of them might do bad, but most of them are going to grow and do quite fine. So that's why if you hold them for 10 plus years, you're bound to make money. I don't believe there's any 10-year period in history that stocks have went down. Now let's talk a little bit about averages. The average return that you'll get from the stock market, history shows, could be between 7 and 10%. It's probably closer to 10, but to keep it conservative, I put 7 to 10 just in case. Do you know what the average savings account interest rate is? That is 0.06%, and that will not get you rich. So let's use this idea of long-term investing, guys, and let's talk about compound interest. Why should you care? Because you could get rich from it. So now that I have your attention, I'm going to show you a compound interest calculator. There's a bunch all over the internet. Just type in compound interest calculator. They're essentially all doing the same exact thing. So let me show you what I'm talking about. So this is one of the calculators that I've found from investor.gov. I'll leave a link in the description if you guys want to play with it. But just to show you, the first step shows you that we are starting with $1,000. The length of time that we're going to wait is 10 years. And like I said, our average return of the stock market is 7 to 10. I'm going to keep the lower amount just to show you guys something, 7%, and it's compounding monthly. So if you keep it in there for 10 years, making that 7%, you could see you'll have over $2,000. You'd be doubling your money. Not too bad. However, the real power of compound interest is in long term, guys. This is 25 years, same $1,000, didn't touch it, 7%. You'll have over $5,000. That's over quadrupling your money. So this is the main power of compound interest, guys, that you can get rich from it. And I want to put it in this video in case you're like beginners. I want to show you that the stock market can create something ridiculous for you. You just have to stay with it. Or else, where would you put in your money, guys? Let's say it's the savings account we were talking about, getting 0.06% interest. Let's put it away for 10 years. Let's say 25 years. What will we get from that $1,000? Obviously, you could see you're getting garbage in your savings account. You might as well roll around in dog crap. And one last chart, guys. I wanted to show you how fast it could grow over time. It does start slow in the beginning, but over time it increases exponentially. Big word. But this next example is if you put, with that $1,000, $20 a month as well. That is only $5 extra that you don't have to spend on whatever you put in the stock market. $5 a week, $20 a month. This is what you'll get in 25 years. With that $1,000, you'll see over 20 grand. And that's only $5 a week. Now, I could show you more ridiculous numbers if you start investing more for longer periods of time, but I urge you guys to play around with it. See what happens. But you could easily hit, with long amount of time, past the 25, 30, 40, 50 years, you get into the millions. And those are basic ideas of the stock market for you guys. I've been researching over the years and just been looking at nonsense, and I wanted to condense really important main parts into one video for you guys. So that's it. If you guys are more interested about the stock market and want to go a little bit deeper, I do have a series every single week. We look at the stock market weekly recap. We just look at what the stock market did for the previous week and look how it moves around. If you're interested into that, I'll leave a link in the description for you guys to check out if you'd like. If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people do, guys. Thank you so much for watching, and I'll see you in the next one.